How would you feel if you watched a high-flying, futuristic asset lose a massive chunk of its value, dropping into a harsh, multi-month falling trend and flashing clear sell signals on almost every single technical indicator, while a small group of vocal traders insisted it is completely undervalued? Welcome to the wild, fast-paced world of tokenized assets, where cutting-edge real-world technology and decentralized blockchain markets collide. Today we are looking closely at Joby Aviation Tokenized Stock, trading under the ticker symbol RJOB, currently ranked around number 3802 in the broader digital asset space. Right now it is sitting at $8.52, pushing a 24-hour increase of about 3.81%. But do not let that single green day fool you into making a hasty move. Behind this small daily bounce lies a massive macro debate dividing the community. Is this a rare deep value buying opportunity in a revolutionary tech leader? Or are we looking at a classic bull trap designed to catch retail investors completely off guard? Before we unpack the technical charts, the order books and the fundamental data, make sure to hit that like button, subscribe to the channel right now and turn on notifications so you never miss an urgent update on these high volatility moves. Also, it is absolutely compulsory today to leave your comment below. Tell me, do you think RJOBY is a hidden gem ready to rocket, or is it a sinking ship that will pull your portfolio down? Seriously, leave a comment right now because the algorithm needs to see where the community stands on this asset. Remember, absolutely nothing in this video is financial advice. We are analyzing the market trends, the sentiment and the pure data to see how this plays out. Let us get straight into what is actually going on behind the scenes here. To understand why this tokenized stock is suddenly in sharp focus, we have to look at what the underlying company actually does. Joby Aviation is a major pioneering player in the development of electric vertical takeoff and landing aircraft, commonly known as eVTOLs. They are building next-generation commercial passenger air taxi services, aiming to completely revolutionize urban transportation by bypassing gridlock with fast, quiet, and zero-emissions flights. The underlying stock Joby has experienced intense market attention due to its partnerships with major airlines, investments from automotive giants, and ongoing regulatory certification processes with aviation authorities. Because of that immense global relevance and the hype surrounding the future of transportation, entities tokenized the stock to allow crypto traders to gain exposure to its price movements 24 hours a day, 7 days a week on the blockchain. But recently, things have taken a sharp, painful turn. The initial market euphoria has cooled off, regulatory timelines are dragging out, and the market is forcing investors to face a grim reality. The asset has faced a rough patch, and that is exactly why the crypto version RJOBY is experiencing a tense tug-of-war between aggressive buyers and stubborn sellers. Let us dive deep into the technical analysis because the charts are telling a very fascinating, almost contradictory story. If you look at the medium to long-term trend, the underlying asset has historically been locked in a falling trend channel, which signals steadily increasing pessimism among investors and indicates the potential for further declines. But when you zoom into the short-term picture, the immediate momentum tells a highly dramatic story. The Relative Strength Index, or RSI, recently dipped heavily below 30, showing that the short-term momentum of the stock has been strongly negative. Investors have steadily reduced the price to sell the asset, indicating deep short-term pessimism. Right now, the asset is trapped just above a critical psychological support level at $8, which may give a temporary positive reaction. High volume historically came in at the price tops, but the recent sell-off has left a lot of traders holding bags at much higher levels. A definitive break downwards through $8 will be a heavily negative signal that could trigger a massive cascade of stop losses, while a sustained break above the nearby overhead resistance ceilings is required to prove that this daily 3% pump has actual structural legs. Right now, the short-term weakness is battling critical horizontal structure, leaving day traders on absolute high alert. This brings us to the ratings and the technical signals, which are causing a lot of anxiety in the trading forums. While some traditional Wall Street analysts hold on to long-term buy ratings based on the massive future addressable market of urban air mobility, the immediate technical indicators are flashing sell and strong sell signals across multiple time frames. Prominent institutional firms have maintained a highly cautious stance, citing severe valuation concerns and long pathways to commercialization. Furthermore, the company faces significant fundamental hurdles, including missing revenue expectations because they are still in the pre-revenue development phase and dealing with deeply negative operating cash flow due to high research and development cash burn. When you combine negative technical momentum, short-term sell signals, and institutional caution, it creates a massive cloud of negative sentiment over the short-term outlook. So, is this asset genuinely undervalued, or is it a dangerous value trap? The answer depends entirely on which side of the order book you look at. The crowd calling it undervalued points to the massive technological lead the flight test milestones achieved, and the fact that the aerial ride-sharing economy could expand exponentially over the next decade. They believe the current pullback toward $8 is an absolute gift, a natural market correction that lets smart money accumulate shares at a massive discount before the next big macro leg up. On the flip side, the bears argue that this is a textbook value trap. They point out that retail traders often get trapped in these assets because they only look at the historical high prices and assume a dip means it is cheap. They forget that slow regulatory approvals, intense execution risks, and persistent net income losses can keep a developer tech stock depressed for a very long time. Retail traders buy the dip expecting a quick recovery, only to watch the support level crumble beneath them. Let us break down the exact risk you are facing if you trade this asset. The first major risk is extreme volatility. Tokenized stocks often trade with different liquidity profiles than traditional equity markets, meaning price swings can be much sharper, deeper, and faster, especially during off-market hours or weekend crypto trading sessions when traditional stock exchanges are closed. The second risk is the ongoing capital cash burn. Because developing commercial aircraft requires billions of dollars before generating sustainable revenue, the underlying company may have to rely heavily on financing activities or diluting shareholders to stay afloat. When a company dilutes its shares, the value of each individual tokenized share faces strong downward pressure. This is precisely why retail traders get trapped. They chase the futuristic hype of flying cars and air taxis without realizing that structural financial issues and regulatory delays can drag the price down, regardless of how cool the underlying technology sounds. To weigh this properly, we need to look at both the bull case and the bear case. The best case recovery scenario, the bull case relies on a few major things going right. First, the asset must firmly hold the $8 support level and consolidate to build an accumulation base. Next, the underlying company needs to clear its next major regulatory certification milestone smoothly, proving that commercial deployment is just around the corner. If they report an accelerated timeline or a massive new institutional investment, RJOBY could easily break through the short-term resistance ceilings and target the $10 to $12 range, rewarding patient buyers with massive gains. Conversely, the worst-case continuation scenario, the bear case, is quite grim. If the short-term negative momentum continues to dominate, the $8 support floor will shatter completely. A break downwards through $8 opens the door to a rapid drop toward the next major technical support levels, potentially dragging the price down into the $6 to $7 mark. If the company faces regulatory delays, pushes back its commercial launch dates, or announces further equity dilution to fund operations, the institutional sell signals will intensify, and the short-term downward trend will simply continue lower, leaving late buyers with heavy long-term losses. Looking at the outlook, there is a massive disconnect between the short-term and the long-term. In the short term, the perspective is highly cautious, if not outright bearish. The technical indicators, the lack of current revenue, and the strong negative momentum suggest that the asset could face continued downward pressure or painful sideways grinding before it finds a true macro bottom. The short-term trend is firmly in the hands of the bears until proven otherwise. However, the long-term perspective offers a glimmer of hope for the patient investor. If you believe that electric aviation is the absolute future of transportation, and that this company will dominate its niche over the next 5 to 10 years, then the current short-term weakness is just noise on a long-term chart. But surviving that short-term noise requires a stomach for massive risk and high volatility. This brings us to a massive point of uncertainty. The market is standing at a critical crossroads, and no one can say with absolute certainty which path RJOBY will take. The daily 3% bounce shows that buyers are trying to fight back and defend the technical floor, but the overwhelming technical sell signals suggest the downward pressure is far from over. Are we witnessing the final capitulation of weak hands right before a massive institutional reversal? Or is this minor bounce just the quiet pause before another devastating letdown that flushes out the remaining retail buyers? The charts are locked in a tense standoff, the data is conflicting, and the next major move will catch a lot of people off guard. What do you think will happen when the market opens up tomorrow? Will the $8 floor hold? Or are we about to watch it collapse?